And there's now just 1 week to go until Trump's 90-day pause on trade tariffs comes to an end. On that same day, the Reserve Bank here will give an update on the official cash rate, the benchmark for lending rates. As political correspondent Zane Small reports, the global uncertainty combined with a rise in food prices is expected to see the central bank hit pause on cuts for the first time in a year.
$10 for 500 grams of butter.
What the hell? What the hell? What the hell?
High dairy prices driven by strong export demand, resulting in a recent spike in food prices overall, which may spook the Reserve Bank, tasked with maintaining price stability, into pausing cuts to the official cash rate next week.
We think that the Reserve Bank, probably time for them to take a bit of a cup of tea here in terms of the quite significant easing cycle that we've seen now since August last year.
ANZ agrees, saying on balance we think the RBNZ will keep the OCR unchanged at 3.25% next week. That would put an end to the central bank's consecutive cuts to the official cash rate, so a drop in home loan interest rates is unlikely.
I think there'll definitely be some disappointment if interest rates don't keep decreasing, because a lot of people are enjoying having the lower repayments.
Those lower rates, the result of a recession engineered by the Reserve Bank itself. To bring post-pandemic inflation under control, it hiked up interest rates. And once consumer price rises showed signs of easing, it lowered interest rates to stimulate the economy. But with food prices rising against a backdrop of global uncertainty, the cycle of back-to-back cuts looks set to hit pause. There's now just 1 week to go until Donald Trump's 90-day negotiation pause on trade tariffs comes to an end. And don't expect another extension.
No, I'm not thinking about the pause.
What's happening in America at the moment, and a lot of the policy changes and decisions that are being made there are having a big flow-on effect to wholesale rates and market stability.
Westpac, however, reckons that after a pause next week, the Reserve Bank could return with another cut to the OCR in August, because the job market is still tight.
I think it's right to say that there are certainly decent parts of the economy that are still struggling, and the labour market is a very good case in point. We would expect that the labour market's going to remain a bit tough, probably until the end of the year. That's when our forecasts suggest that you're going to start seeing meaningful employment growth and the beginnings of a fall in the unemployment rate.
Credit data from Centrix shows company liquidations are up 27% on last year, while official figures reveal filled jobs in May were slightly up on the previous month, but down more than 34,000 compared to a year ago.
This is why the government has been so focused on getting inflation and interest rates under control and spurring on that economic growth that we need to create more jobs and better incomes.
Still plenty of room for growth in the economy, but shoppers would argue no room for growth in food prices.